I'm honestly shocked that Tesla's stock is down 1.7% today because you're getting some very strong statements from some hedge fund managers today in regards to Tesla's stock, most notably Dan Ives and Altimeter's CEO, Brad Gersner, that says this FSD V12 could be Tesla's chat GPT moment. You guys have to remember, the reason you're invested in Tesla long term is not the auto business, where you get the 10, 20, 30x gains from here, 3,000% returns potentially over time. It comes from the robotaxi network. So I'm going to share with you guys a bunch of new information from today. And today in Tesla's stock could actually be one of the last buying opportunities that you'll see for quite a while, in my opinion. Unless we go through some kind of unexpected correction event in the markets or Tesla whiffs it on earnings again. Besides that, I think Tesla stock's going higher from here. First, before we get started with all of this information, hit the like button, subscribe to the channel, and let me know what you think down below in the comment section, and let's get started. Tesla Economics posted this. Brad Gersner officially drops the mic on why he's bullish on Tesla FSD live on CNBC, and the only thing the newscast can say is, we'll leave it right there. Let me go ahead and play you this clip. It's almost 3 minutes long. If you don't want to watch the whole thing, then skip ahead. Brad Gersner, he actually said this a couple of weeks ago, but he just went on CNBC to say it live in front of their millions of viewers. And I want to share exactly what he said with you and talk about this GPT moment that Tesla could have a little bit more in depth.
It's been a terrible performer, as you know. It's certainly the worst of the mega caps, if you want to still call it that, year to date. Why'd you buy Tesla, Brad?
Well, Scott, you start with probably the best product engineer CEO on the planet, a stock that's sold off a lot. Right? And, when everybody else is negative about things, like negative on Google, negative on Tesla, that's when we start getting excited, particularly when they're run by a founder who's as extraordinary a product leader as Elon Musk. But there was a second catalyst, and a little plug here for my podcast, BG2 Pod with Bill Gurley. We went into this in depth 3 or 4 weeks ago, but Tesla, kind of when everybody else was asleep, launched full self-driving 12. This was their new generation of self-driving model on their car. I described it on Twitter as when I took a test ride in it as kind of a chat GPT moment. In fact, I think Michael Dell said something similar on Twitter. Why is that? Because they totally scrapped their prior deterministic models and have moved to an imitation learning model that really, for the first time, unlike Waymo, which is still a deterministic model, feels like a human driving the car. So I think they're making massive progress at an accelerating rate on FSD 12. He's now pushed that out for free to all Tesla owners so that they get to sample, see what it feels like. If a meaningful, or even just a small percentage of those agree to pay him $200 a month for FSD 12, all of a sudden this goes from razors to razor blades, right? Where people are paying for services. Think about that services transition at Apple that occurred in 2015, 2016, and it's the type of thing that other people can't easily copy. He's got 5 million robot cars on the road collecting data that's training this imitation model that makes it demonstrably better and almost impossible for all the traditional OEMs to replicate. So we like that for Tesla, but we also stipulate China's messy. We think a lot of the negativity is priced in. We think they could miss their delivery numbers next week. So you got to, this is not for the faint of heart. You have to size it appropriately. You have to be willing to buy more, if the stock goes down. But betting on Elon Musk, particularly in the age of AI, where he is building market-leading AI and market-leading models around these cars, I think is a bit of a no-brainer.
We are going to leave it there. I appreciate you.
I mean, wow. I'm glad somebody on Wall Street finally said something on CNBC, on Wall Street, to the people out there, because everyone's been so negative on Tesla. And he just said basically what I've been saying for the past couple of weeks. Betting on Elon has never failed people before. Give it enough time in his publicly traded companies. And your ChatGPT moment, I think, could be coming very soon. Right now, everyone's focused on the hardware for AI. Inevitably, that will change to the software aspect or the implementation of the hardware AI into what are companies going to do with that? All these companies buying NVIDIA GPUs, they're buying them for their own AI projects. Inevitably, those projects should be more valuable, essentially. And specifically with Tesla, it's so underlooked right now. The robotaxi network could be just months away from deploying in different various cities. Literally just months away. At this rate of speed, you could say 6 months from now, maybe we're looking at Tesla submitting some permits to San Francisco. I would not be surprised unless there was some kind of major setback here. You already have a new iteration of FSD coming out. And again, everyone was buying Tesla stock at $400 per share based on the robotaxi network. But yet people are essentially asleep at the wheel. We're closer than ever to that. And Wall Street is still very bearish on Tesla. They're going to be caught off sides in an epic way. And that's why I'm looking to put 6 figures plus into Tesla stock here, even at these prices. Anything under $200 per share, I am going to be dollar cost averaging into a very large position. This is not something that I can just sit out. I can't sit here and have all of this information that Wall Street apparently doesn't realize and not do anything with it. I have to act on what we're seeing from Tesla. There's not too many instances where you'll have a company like Tesla in, especially AI. Like Wall Street doesn't realize the progress and improvement an AI company is making in this market. Are you kidding me? I think AI is probably the best investable area of our markets for the next 10 to 20 years, to be honest. I think hardware names, NVIDIA, SMCI, some of these stocks, they're pretty vulnerable here. They're fully valued. They're pricing in a lot of good news. But some of your stocks that are deploying real-world AI, like a Tesla, they're very underlooked right now. And I think that's where the opportunity is. Biggest of all with Tesla, if they can just start the robotaxi network, I think Tesla stocks go into new all-time highs. But we'll talk about that more in the next video coming out at 8 p.m. tonight. Trust me, you do not want to miss it. But on with your other Tesla stock breaking news today, and there's a lot of it. Here today, Citi analyst Italy Macaulay lowered the firm's price target on Tesla to $196 from $224 while affirming a neutral rating on the shares. Macaulay also slashed his first quarter delivery estimate to 429,900 from 473,300 to reflect recent data points. The first quarter setup for Tesla, quote, looks tough on aggressive consensus estimates, the analyst told investors in a research note. In recent weeks, consensus estimates have come down, but March data points have also disappointed, Macaulay said. He added that Wall Street estimates are still looking too high, not only for 2024, but also 2025. And that's not as important if Tesla focuses more on profitability. If Tesla takes the pivot from growing unit volumes to growing profitability, that's what's going to send Tesla stock higher. Not if they come in with 2 million deliveries or 2.2 million deliveries. That's not going to have much of an impact on Tesla stock here in the short term. If you're betting on the short term and Tesla stock going higher, you have to imagine profitability at least bottoms, margins bottom, and profitability can start to grow from here. If you're not willing to make that bet, then maybe Tesla has further to fall. Although if you've seen some of my prior videos, I do believe Tesla is making the shift to focusing more on profitability. If I'm correct, coming on April 17th, the estimated date for Tesla deliveries, that's probably the last time you're going to be able to buy Tesla for this cheap. Two specific reasons why Tesla stock may be down today. is because Dan Ives came out and had some not so positive things to say about this upcoming delivery number. He says Tesla is facing a white knuckle period as China demand remains soft and is expected to weigh on first quarter deliveries, which are due to be reported in the coming days, Wedbush analyst Dan Ives said on Thursday. The longtime Tesla bull said the electric vehicle maker has had a, quote, nightmare quarter amid a perfect storm of demand issues that have sent consensus expectations sharply lower. Also on Thursday, Emmanuel Rosner at Deutsche Bank yet again cut his expectations for Tesla deliveries, the EV maker's proxy for sales, on similar concerns. Tesla reports deliveries a few days after the end of the quarter and could report first quarter numbers as early as Monday. The FactSet consensus calls for deliveries of 457,000, which is a little bit lower than the average analyst estimate, currently over 470,000. So expectations are quite high, but I think Tesla's stock is priced for that. Gary Black wrote this post on X today. He says, we believe Tesla's likely Q1 volume miss next week may be nearly fully discounted by Tesla's sharp year-to-date underperformance, with Tesla down 28% versus the NASDAQ up 9%. We expect Tesla's IR compiled consensus due out today or tomorrow may right-size Q1 expectations at 430,000. Bloomberg consensus still shows 460,000 in front of next Tuesday's Tesla Q1 P&D print. So you're actually getting Bloomberg's estimates falling from over 470,000, as I just said, to 460,000 here today. He also says we tend to agree with bulls who see FSD 12.3 as Tesla's 1 month free trial as a potentially game-changing event. That said, we don't expect a material change in near-term FSD take rates, currently 10 to 15% at the current $199 a month subscription rate, or any change in Tesla's marketing strategy, and referring to the supervised FSD drives. But he does say that could ultimately boost FSD acceptance, but also increases Tesla's legal risk. And I think that's the biggest thing that will inevitably slow down the robotaxi network ultimately getting deployed. But that's why you have insurance. And you're going to have to mitigate that risk to some degree. Teslas on FSD are already safer than the average driver. So we'll see. There's definitely a path forward for Tesla to start accepting liability. But in a very limited capacity. And that is one reason why I do believe a gradual rollout of the robotaxi network would be likely, right? San Francisco, couple big cities at first, and then you get a gradual rollout from there. But all it's going to take for Tesla stock to hit new all-time highs is a rollout of the robotaxi network in one city. Once you get one city under the belt, it's not even about the profits generated from one city. It is the idea that robotaxis are actually going to be here, and they will be deployed everywhere over time. That's a game changer for Tesla stock. A complete game changer. And I believe that could start rolling out in the next 6 to 12 months. In fact, take a look at this post from Sawyer Merritt today. It says New York City has opened permit applications for autonomous vehicle testing. Just wait until we get news that Tesla is applying for that. Oh my gosh. But really the big reason why Tesla stock may be down today is from Dan Ives. He trimmed his price target on Tesla from $315 per share down to $300. So we cut his price target about $15, but that would still indicate upside from here of about 67%. Why the markets may be paying attention to Dan Ives, we've seen other analysts cut their price targets, but some of those analysts have been the worst analysts on Wall Street. Dan Ives is one of the best analysts on Wall Street, ranked number 627 out of 8,772. Just not that long ago, he was ranked like 100 out of 8,700. So he's definitely went down in the rankings a little bit as of recently, but still one of the top analysts in the top 10% of analysts on Wall Street. Generally speaking, when, analysts like Dan Ives make adjustments, the markets tend to listen. Also, I do believe, considering today's Thursday and we're going to be getting Tesla's delivery number coming out, next Monday or so, this is probably the last day, the last moment that you can actually make adjustments to your Tesla position before that number comes out. And I'll go over my expectations for Tesla's delivery number in the next video. But this 2% drop today is probably pricing in the last bit of fear regarding a lower than expected delivery number, meaning that when you get the number coming out, it's probably fully priced into Tesla stock. I would be very surprised if it wasn't. And I think you'd have to get a really bad number for Tesla stock to sell off coming on April 2nd. But Dan Ives does say here on X, Q1 has been a nightmare quarter for Tesla as China demand remains very soft. Q1 delivery estimates 475,000 to 425,000 as Tesla saw a perfect storm of demand issues hit this quarter. Lowering the price target to $300, Musk must steer Tesla through this white knuckle period. Remain bullish, but the seatbelt is on. And Dan Ives went on CNBC today and says this next week is Tesla's rip the Band-Aid off moment. And what that essentially means is, it's going to be open and out there that things are not great. But ultimately, I think Tesla stock is already priced for that as the worst performer in the S&P 500 year to date. Like, this is not going to be a surprise to anyone if Tesla utterly misses analyst expectations for deliveries. Again, I think the big upside surprise for Tesla investors is when Tesla comes out on the earnings call and they say they're going to focus more on profitability. That's what gets Tesla stock really moving to the upside. Also, at these depressed prices, I think just a simple small share buyback program could be a big positive catalyst for Tesla. And doing a share buyback is another way to become more quote unquote profitable. If Tesla buys back the shares outstanding, that boosts EPS. Now check out this interesting clip. I'll go ahead and repost this on the X account. Go ahead and follow the X account. You can see down here where my cursor is. It is Michael Tyler. And I share a lot of great things that you should know on broad markets, Tesla, AI specifically. And this is from Andre Karpathy. He says that Elon Musk has a unique management style and is very good at getting rid of low performers. And this individual on X, Dashray Yadav, I don't know if I'm probably butchering that. He is the co-founder and CTO at Amden Chain, an AI platform, Tesla AI Autopilot. And he says precisely why Tesla AI is so successful. When I joined Autopilot, we were 120 engineers, and over 4 years, the strength grew to only 200 engineers. Either hire A+ engineers or don't hire at all. China's Shanghai Telecommunications Authority says Tesla's vehicle internet OTA upgrade diagnostics service platform is impressive and leads the industry with the industry's only level 4 rating. Tesla was the only company to receive a level 4 safety protection rating using its automotive software services and hardware security. Xiaomi's SU7 EV will go on sale in China at a starting price of about $30,000 US, and there's been some concern that this could eat into Tesla's market share, and we'll have to wait and see. And according to a report, Ford's $25,000 EV platform will underpin multiple different models. And for the first time, Tesla's FSD Beta V12 3.2.1 is now officially rolling out to vehicles on the 2024 software branch in North America. And it looks like the Cybertruck tour is going to Thailand next. Ford is cutting their workforce at the F-150 Lightning plant in Dearborn, Michigan by 66%, or about 1,400 people, starting next week. Kim Kardashian has posted a set of new photos of her with her Cybertruck to her 364 million followers. Again, could be pretty effective free advertising for Tesla. Hyundai says it will invest $51 billion over 3 years in South Korea to ramp up electric vehicle production and new mobility business, and separately hire 80,000 new employees, doubling down at a time when other automakers are slowly shifting their efforts. Tesla's Google Trends data continues to show a slight deceleration, although search trend activity is up massively in recent weeks for Tesla. You have seen the Model 3 go from 38 to 37, Model Y go from 35, well, it's still at 35, the Cybertruck go from 35 to 34, and the Tesla Model X go from 11 down to 10. Global inventory numbers for the Model Y are plummeting, so that is good. We'll see if that is a sign of demand picking up or production slowing down. The Model X, the Model 3, and the Model S are also declining in inventories. And again, question is demand picking up, or is, production slowing down? Either way, I have confidence in Elon Musk to make the best decision for Tesla stock investors. After all, I think Wall Street believes they could run Tesla better than Elon could run Tesla. And let's be honest, Elon is the reason Tesla is what it is today. And I don't think anyone else on this planet could have done or continue to do what Elon is doing. So I'm not going to try and think I can outsmart Elon and make a better choice than he can, because clearly that would be wrong. Nonetheless, Tesla is currently running 4,000 different ads via Google. Sentiment today on StockTwits, mostly capturing retail investor sentiment, is bearish today at 43. Yesterday was neutral at 47, which again, when you continue to get good news after good news after good news that Wall Street doesn't pick up on, you gotta stop looking at Tesla stock and how Tesla stock is reacting to the news. Inevitably, all of this good news we are going over basically every single day that is huge news. Wall Street's going to figure it out, and they're probably going to figure it out very quickly. And by then, you're not even going to have a chance to buy the dip. Tesla stock's going to open up 10, 15, 20% higher when that does happen, and boom, your opportunity to buy at low prices is gone. Message volume today is at 48, which is considered normal. Yesterday you were at 50. Doesn't surprise me. It's the last day of a trading week. Message volume typically is lower on a Friday. This case, a Thursday. You also have a participation ratio that is high at 55, which you've been there for a while, and that just shows there's a lot of accounts talking about Tesla. Tesla's option activity today from hedge funds and institutions is actually very positive. You have a positive order value of 69%. You have seen 504 orders totaling $354.29 million. Tesla's short sellers are also, my opinion, biting off more than they can chew, with Tesla's short interest at 3.71%, the highest you have seen in about the last year or so. The last time you were similar to this was back in July of 2023, when Tesla's short interest hit about 3.7%. Beyond that, you got to go back to May 31st of 2023, where Tesla's short interest hit 3.75%. Now, what happened after May of 2023? Well, back in May, literally the bottom for 2023 was April 27th, 2023, where Tesla stock hit about 150. The stock ended up rallying about 100% after that. And the shorts did cover on their short positions to some degree, because the short interest inevitably fell down to about 2.95%. Just a small amount of shorts covering mixed with the right news and some good momentum heading back into the stock can cause a huge reaction to the upside. Think about this as well. Tesla's dollar amount currently sold short is $18.45 billion. If you start to see big jumps in Tesla stock, shorts are going to be losing billions and billions and billions of dollars. That's not an ideal situation shorts want to be in as of right now. We do have cost to borrow max at about 10% as well, so likely a lot of shorting activity taking place today in Tesla stock. It's also worth considering today is the last day of Q1. Stocks, generally speaking, the S&P, the NASDAQ have done very well. So there's a lot of portfolio rebalancing that is taking place today. So there's a lot of weird kind of movements happening out there in the markets. I wouldn't draw any conclusions from that, but nonetheless, Tesla is holding up at this trend line as support. Fantastic news. You fell under this at one point today, down to a low of about $175.50 or so. The actual low of the day was $175.70 per share under this trend line. And now you're back above that. So that's a really good sign heading into this delivery number that we will get. And odds are this is a, sell the rumor, buy the fact kind of situation for Tesla coming on April 2nd. But I'll go over that a little bit more in the next video. Overall, Tesla's technicals look pretty dang good, even though the stock is down 2%. You do have an RSI at 45.69, and your MACD is pretty dang positive as of right now. The percent of stocks above their 50-day moving average continuing to rise, now at 66.29%. You're starting to get a broader kind of market participation with the average stock. So it looks like as of right now, you're getting a catch-up effect, but a lot of Wall Street is starting to warn about a potential correction. Even Goldman Sachs and JP Morgan today expecting stocks could fall big time soon and coming out with a pretty dire warning. I'll share that with you in the next video because we're getting a little stretched on time. This video is a lot longer than I honestly expected. But nonetheless, market breadth is improving. 10-year treasury yields today are up about 1 basis point, and you are continuing to see that rotation out of big tech into the Russell 2000. Considering today is the last day of Q1 and portfolio rebalancing, that's a pretty good sign. The next couple of months could be more positive for small cap interest rate sensitive stocks than what we have seen so far in 2024. With all of this said, we have a lot to get into in the next video, including my official estimates for Q1 deliveries, why I think Tesla may actually rally on a weaker than expected delivery number, how the shorts could be setting up for a short squeeze coming soon in Tesla stock. That could be really good news for obviously you and me, Tesla bulls, and what Wall Street is saying about a correction that could come, quote, suddenly without much warning. And that's what JP Morgan just said today, among other things as well, where I think Tesla stock is going over the next, couple of weeks, all kinds of different things. We do have big economic data coming out tomorrow morning. Markets are closed, so that's going to be a weird situation. You also have a speech from Powell, and I will go over expectations the markets have for that, and if I think that can move the markets as well coming next Monday. So in the meantime, hit the like button, subscribe to the channel. Let me know what you think about this information down below in the comment section. If you guys want to come trade with us live in real time as well, check out the link down below in the description of this video. You guys have a fantastic rest of your day and weekend. I will see you in the next one.